On Tuesday, June 2nd, 2024, Access Holdings plc held a formal signing ceremony as part of the arrangements to raise a total of 351,9,103,017 naira and 20 kobo by way of a rights issue to existing shareholders. The offer is part of the group's strategy to enhance its working capital requirements, which include organic growth funding for its banking and non-banking subsidiaries. However, subject to approval of the Securities and Exchange Commission (SEC), the acceptance and application lists for the rights issue are expected to open on Monday, July 8, 2024, and close on Thursday, August 8, 2024. For more on the Access Holdings rights issue and what every shareholder and investor should know, we're now joined by Muhammed, CEO of Finance with Mukhtar. Good morning and welcome to the morning show.
Thank you.
Good to see you. So, the first thing I'd ask you this morning is, what is your assessment of Access Holdings' decision to pursue a rights issue at this time? Well,
it's a CBN policy. First and foremost, the CBN said the bank should recapitalize. The thing I ask is, did the bank really need to recapitalize? If you look at the general terms, ordinarily is that banks use their retained earnings to boost their shareholder fund, but the CBN said no. One new capital injection because we are trying to build a $1 trillion economy, and so you need, when you want to drive such things, the financial sectors are the key drivers of development, especially when it comes to economic development. So I think that's the major reason why they decided that, okay, we need to go for that right, we need to do right, we need to improve our shareholders fund, even if they have enough shareholders fund. So that's why it's not something that they're so desperate, but the CBN has made it that you must recapitalize. Okay. And so ordinarily, sometimes you have to have different offers, but Access feels that, okay, look, your shareholders are there, we just do the right issues, which is only for existing shareholders, so that we can build our capital base to be able to take opportunity of this $1 trillion economy. Because again, with Access, they're already a trillion naira profit company already. They were the first that made that, and also they have expanded over all the shore of Africa already. And those numbers are coming in from their subsidiary in Africa, and some of those numbers have not started coming, but you could see the effect of that on their bottom line.
All right.
How do you view the potential impact of the rights issue on the group's financial position and capital structure?
You can't overemphasize. Let me give an example now. They are also into pension fund administrator. Remember, they just acquired ARM Pension, which is the second largest pension fund administrator in Nigeria. Then when you add ARM, was the first, Stanbic is the first, ARM is the second. Then you have Access Corporation also, which is also a pension fund. They had about 7%. And when you add it to what ARM has had, about you look about almost, they will become number one by the time you have those synergy together. One, that's what they are looking at, taking opportunity in that space. They're also looking at the fintech space, to those who are part of what they will use to broaden their bottom line. And like I said, they're also looking at synergy in other sectors of Nigeria, because like the fintech space, which seems to be where development is driving towards. And they said it in their prospectus that most of those numbers are going to help drive down growth, especially for shareholders that are able to take their right going forward.
So what are the financial indices observed, from an independent standpoint, that investors and existing shareholders should leverage on making informed decisions as regards participating in this? Break it down and just give us the numbers.
Okay, good. You see,
because as we're coming to this, I was saying, I only like to do money market. You were like, no, that will not be. Do this. Why should we do this one?
Okay, now. You see, when it comes to a company, let me not bore you with so much of the numbers so that you will get it now. To determine the true value of a company, you look at what we call the PE ratio. So when you look at the PE ratio now as it stands today, the PE ratio of assets is about 1.2%. What it means is that the potential of growth is still very, very high. Now, for me, when people say, what do you look for as an individual investor? I'm not looking at the bogus profit that you're going to give to me. I'm looking at an investor, what will come to me, what percentage of what will come to me from your profit. And then how do you calculate those percentages? It comes from your earning per share. Now, currently today, Access Bank earning per share is about 17 naira 40 kobo. What it means is that Access Bank can confidently pay you 17 naira 40 kobo. But they will not do that all because you have what we call, I talked about retained earning. So that you can earn, you retain your earning for some time so that you can help it boost your shareholders' funds and also help pay your shareholder in case there is any issue that you are not able to meet your profit target. So when you look at that with what Access have now, with what they paid last year, with what they have now, as an investor investing in there, you already know that you are sure of residual income from the current earning per share they have. So for an investor, what you look for in any stock is earning per share. How much is it that they have made in terms of profit and how much will come to me? So that is what you look at. So, and if you look at that earning per share of 17 naira 40 kobo and a right issue of 19 naira 75 kobo, you just realize that the earning per share is almost the price of the right issue. So that means you are at a very, very big discount. And like I said, looking at the PA ratio and the earning per share, Access Bank remains the cheapest because if you look at others, one of the bank has an earning per share of 19 naira, about 19 naira 70 kobo, and his price, his offer price is way higher than Access Bank.
All right, okay. I hope you're convinced and not confused, Rufai. But
It's not confused. We'll have that discussion again.
All right, well, in your estimation, how transparent or unfair is Access Holdings' approach to the rights issue process?
I think I've been in this space for a while. I think there's always what we normally see is that when there's a right issue, you just see the price. Then investors are buying, they make you feel you're buying at a discount. Then by the time you buy, you see the price. But in these present issues now, Access is looking at what is the true value of our stock via what is the market giving it as value. Now, market value is based sometimes on perception, mostly not based so much on fundamentals. So the current price of Access is based on the fundamental of the company, which make it cheaper. Like I said, if you look at all the variables to take the price of, to know what is the true share price of Access, Access should be selling between 22 naira 50 kobo for the right issue. But, so they are giving it at 19 naira 75. So there's already a discount. So when you look at that, the openness, the sincerity, whereby there's no manipulation, saying, okay, when you're buying in, you're buying it. Because what they have done is that they have allowed market forces also in the true spirit of capitalism to determine the price. So what you are seeing now is what we call, in terms of market correction in the future. Because let me give you an instance. 2 years ago, the return, if you buy an Access Bank share, maybe 3 years ago, the return you've gotten as an investor is about 161%. If you bought 2 years ago, the return you've gotten also is about 131%. And when you look at that via inflation of 40, maybe 39.9, so that means even before the inflation you got to this range, you have already covered up this. So that's why I think there's true value for existing shareholders. Unfortunately, it's for existing shareholders.
Okay, but how do you see this rights issue influencing the competitive position of Access Holding within the industry?
Well,
what relative competitive advantage?
You must know that they have the largest in terms of branch network. And Access synergy has always been how to be a global player. They are not just looking at just being in Nigeria alone. And you have seen that they have grown their branches in all over Africa and in very competitive economies or economies that they think they will create more value for their shareholders. So they have a drive towards people, they have a drive towards the planet, then they have a drive towards profit. And those are part of the things that they are looking at. How the competitive nature in terms of, they are not looking at competition in terms of, oh, we just want to create our bottom line. How much impact do we have in the people? What kind of business are we? If you look at their loan book also, you see that their loan book have expanded. You're also developing smaller business, especially when you look at Nigeria. Nigeria is an informal economy and it's largely driven by the informal sector. And the informal sectors are normally the SMEs. And so they are looking at how much of this capital can come in, they can use help grow some other smaller business, especially now that Nigerian banks are beginning to look at themselves like a global player. So I think that is the main nature, because like I said, most of the banks are not just assets. If you look at the tier 1 banks, most of them do not really need this fund, but the CBN have insisted, and why they need these funds. And some of us know that some of the reason why these funds might come in is because if Nigerians and most sometimes existing shareholders are not taking advantage of this, we'll have foreign investors that are really key of buying some of these banks.
What do you say to shareholders that are still contemplating whether to participate?
Well, investment decisions are always based on funding, based on availability of funds, like I said, and based on your own perception, based on your own goal and aspiration. But if you are a shareholder of assets, I don't know why you won't take up your right at this time, because when you look at all the permutation of the company and where they are going to, what they want to do, and how they have helped you grow wealth, especially if you're a long-time shareholder and you see your portfolio have grown by 161%, what else do you need to convince you that you must take up your right? And like I jokingly tell people, I say some of you envy the billionaires. So if you with your small units, it's time to join the billionaire club and buy some of those slides of what the billionaires have, so that you too can proudly say you're a billionaire. Like somebody told me once ago, they said, no matter how much house you build, no matter how small the house you build, when the landlords association are calling for meetings, you will be there as a landlord. Yeah. So when the shareholder, when the bank is calling for an AGA, where you have all the billionaires there, you should be part of them. So for me, that's enough incentive.
Well, thank you very much for joining us, Mukhtar. Finance with Mukhtar. Thank you very much again. We'll look out for the Access Bank rights issue. You never know. We may be potential